George Roberts joins me here today. You can learn what he is up to by heading over to robertscapitalenterprises.com. And I'm going to have that as a clickable link in the show notes. We're going to be talking about multifamily investing, the economy, and a book release.
Yeah.
Welcome back, George.
It's great to be here, Jack.
So, first of all, let's touch on the book. Is it what you expected?
So I released that October of last year, 2024. And, what I realized even before I released it is that a book launch is about as much effort as writing the book itself, it seems. Still out all the time doing podcast interviews and in-person events as well to support that. So yeah, the book launch is a big part of the package.
Sure. Good. Well, could you cover a little bit? What do you talk about in the book? What can people expect and where can they get it?
Right. So it's available on Amazon.com. And what you'll get by getting the book is you're going to learn a whole lot about private markets. I really do think that is the way to get outside returns and at the same time to avoid all of the volatility of the stock markets. So what you get by investing essentially in Main Street versus Wall Street is an entire world of investments. A lot of people might be a multifamily syndicator and say, hey, just do what I do. But I didn't want to do that. I thought that would be a disservice. As a passive investor myself, I wanted to go through the entire array of investments that you have available to you in private markets. So we go through all kinds of things: private debt, private equity, angel investing, merchant cash advances, and of course, my specialty, multifamily syndication. And then from there, I really go through a lot of mindset. Why do a lot of people not make it to millions? I mean, there's all these opportunities in the world. And I think that the reason is that you have to be able to make qualitative changes in your life. It's not just about getting a little bit better each day. It's about being able to pivot and literally change who you are and what you're focused on based on where you're headed. And I think that if you're willing to make those course corrections, and as a sailor, I do make a lot of nautical analogies in the book, I think that it's entirely possible for people to reinvent themselves. And whatever you're doing today, you can very easily increase that pay in your own field and hopefully invest the winnings and at some point have significant passive income.
So you mentioned that it's as much of a mindset game as anything else. Like when people are evaluating these different scenarios, these private markets, have you found that certain personality traits may coincide better with certain investment structures?
Well, absolutely. I mean, I would say, for example, if you are impatient, obviously you're not going to try buy and hold. Somebody who needs the liquidity of the stock market might be very unhappy with angel investing, where your money is generally locked up for at least 7 years, maybe 10 or more. In a lot of cases, of course, results in complete loss of capital. So if you want to invest in some of these more exotic things, mindset is huge. And I think it's actually something that it doesn't really get enough play. There are so many ways to make money. A lot of people say, this is what I do, just do what I do. I think that when your mindset and your personality and your inclinations and your talents all match up, that's where you're going to get your best returns.
Because I can't imagine that there is the perfect scenario in any of these private markets for everybody. It's like it depends scenario.
Absolutely. And that's the other reason why I like to talk about different things, because at least in my passive investing, what I'm doing in 1 or 2 or 5 years may be vastly different than what I did over the last 5 years, for example, being an active investor. But as a passive investor, you can go over a wide range of territories. So I've been doing a lot more private lending lately, and I'm more interested in investing in cash flowing businesses than I was a few years ago. I want to diversify. I don't just want to have real estate, and I don't want to just be in the stock market.
What caused some of these changes?
Well, one thing is just seeing how difficult it has been to get the returns in real estate, particularly in commercial real estate. People who have debt right now are sitting pretty because they're going to have a great return, say 12% if you're a hard money lender, and you can always foreclose. You can get the vast majority of your principal back, even in the downside scenario. Not true with equity. Now, of course, I do think we're turning a corner, particularly in commercial real estate. Residential real estate didn't see much of a hit. And, now may be the perfect time to invest in equity, but it's always good to be diversified. And I think the last few years were a great reminder of that.
So, in the past podcast, you shared quite a few insights that resonated with many of the listeners. What has changed in your perspective on the real estate side? You mentioned already that it's harder to hit those returns, maybe because of the interest rates. But are you seeing anything in the marketplace where people should possibly be paying attention to right now that you could
Yeah,
find
pay
some?
attention to absorption because we still have a lot of construction activity. Now, last year, I'm sure I was warning all of your listeners and viewers, make sure that you know how much construction is going on in your particular real estate market. Well, now we've seen that a lot of that construction activity has diminished, and that's creating another wave of opportunities. So, whereas maybe a year ago, I wanted to be places that weren't building a lot, now I'm looking more towards the future and saying, well, how much is going to come online a year from now? I mean, obviously, you have to do that. But whereas before we were going from like no construction activity to significant construction activity, to exaggerate a bit, now the question is, how much have we dialed back from that peak? And remember, it's going to take, especially for multifamily, a couple of years almost for that to work its way through. So when you look at for example, if you go to the Census Bureau HUD report every month, comes out around the middle of the month, you can see by region the multifamily starts in your region. Well, what was going on maybe 21, 22 months ago, that's roughly what you're going to see coming online now. And then based on the absorption, you'll have some idea how long it's going to take to chew through that additional supply.
Mhm. Last time we were talking, you were talking about 506Cs and syndications. Are you still actively doing that, or is you primarily focused on the private lending at this point?
So I am absolutely continuing on as an active investor, and I do tend to prefer 506C. I mean, it's just cleaner. The government gives us this very clean way to say, hey, look, just make sure they're accredited. And then, we're not going to come after you. Obviously, misrepresentations, et cetera, can still get you in trouble. But with the 506B, there's always that issue of, do you have a substantive relationship? So yes, I'm still out there doing 506C deals as an active investor, but I would have to say that it has gotten rather difficult. I would much rather sit on the sidelines, keep some powder dry. The stock market's been going just absolutely gangbusters for the last few years. There's always a bull market somewhere, talking about Jim Cramer. Now, you can always find a good place to invest your money. So I haven't really put a whole lot into multifamily in the last year or so, but that may change. I mean, right now, I think our prices are turning a corner. If you've been following, you can get this at Fred. Take a look at the multifamily price index, or actually Freddie Mac, similarly named, but a completely different entity. You can take a look and see how those multifamily prices are turning around. And hey, this might be a great time to buy. But at the same time, as you mentioned, interest rates, even if prices do continue to increase over the next quarter or two, it may be even better to purchase over the next 6 months. So I would say we're right about on the cusp of where I think it's going to make really good sense to be buying in multifamily.
This might not be in your wheelhouse, but I keep coming back to the concept that there's something brewing in the commercial space still, because at least in my market, I'm seeing brand new commercial buildings built, but no tenants, and they've been sitting empty forever. And it's just like we've never recovered that asset class since the whole pandemic.
Yeah, 100%. I mean, there have just been so many things. I mean, where I begin, but in terms of the commercial space, we're still seeing delinquencies in multifamily kick up. So we're not really through it yet. There will be some distress and there will be some great opportunities for those who have their eye on the ball. Yeah, I mean, there's been a lot going on in the commercial space. And then of course, we have a lot of wild cards too. What will the tariffs do? Will they actually go into effect? How long will they stay in effect? So will we actually see inflation? Will it be harder to build? But then if it's harder to build, that makes it better for existing properties. So now that we're speaking right after the beginning of the new administration, there are a lot more questions than answers. But I do think it is a good time. There are issues of distress out there, but we see the 10-year treasury has been dropping like a rock over the last few weeks. We lost at least 30 basis points significant decline. And we're not even expecting rate cuts until the summer. So we're seeing some significant anticipation of that in the markets. So again, I do think that it's a good time to buy, and it'll be a much better time to buy perhaps in 3 to 6 months as we actually do see some of those rate cuts materialize.
You named your book Passionate Living Through Passive Investing. Can you talk a little bit? What do you mean by passionate living?
I love it. And thanks for letting me come back to that, because really that's what the book is all about. So many books will talk about how to build that passive income. But what I really try to tell people to do is make sure that you're living life every day. There's so many things that people could do. A lot of people, I think they get the idea, well, hey, once I become a millionaire, I'm going to go travel the world. But, for example, I traveled all over Lake Erie on a $5,000 sailboat. Now that may be out of the range of financial possibility for a lot of people. If you're thinking that you got to go out and buy a yacht to enjoy yourself, I mean, my kids were quite small when I bought that, like about 7 and 8 years old, and they fit very nicely on it. Now, perhaps it didn't age well now that they're 16 and 18 and over 6 feet tall, but we still have fun there. If you think that the game is all about accumulating a mass of poker chips and then retiring all at once, don't do that. I know a lot of people, particularly in this industry, some people got in this industry because they had a big exit, for example. And husband or wife says to them, hey, you need to go back to work because I can't have you in the house all day. And so it's much better to experience that in your early days. Now, I haven't had a W-2 since I was 48, not exactly retired by any stretch, but I've gone through those growing pains, of course, once during the pandemic, and then once again when I said, see you later. So I think it's far healthier to see how you and your mind and your body respond to retirement earlier in your life rather than waiting until you're in your silver years. At that point, it's really a leap of faith.
Yeah, it seems like we get caught up in the grind in the game. You got to do what you have to, but need to
No,
regain some of our time back. I mean,
yeah.
that's the whole point of this, right?
I was very deeply influenced by stories of JP Morgan, for example. Now, in his younger days, he married a lady who was not healthy, and, time meant a lot to him. And he just wanted to spend time with her. And, he kind of had this early retirement, and, he kind of got shocked out of that and then became the JP Morgan we remember. But I mean, he could have retired at 30. But, at some point he decided, hey, I have a mission in life, and he went back to it. And Mark Cuban, also like that. He had a huge accent, and he could have retired very early in life, but he decided that he had a mission in life. One of the things that I decided I was going to do is, hey, I want to enjoy my free time until I'm sick of it. And to tell the truth, Jack, I'm starting to get there. I'm really loving to get back to the grind in a different way now. I mean, when you grind it out as a W-2 employee, that's one thing. Then you become an entrepreneur and you grind it out in a completely new way. But then when you get to the point where you say, I could leave this entrepreneurship behind or scale it back, try to go towards that 4-hour work week. And then to realize I've done that for a while. I've seen a lot of the world. I've enjoyed my hobbies. And now I'm coming back with renewed vigor.
Just to remind everybody, head over to robertscapitalenterprises.com. And I'm going to have that as a clickable link in the show notes, as well as a link to your book on Amazon.
Appreciate you for looking that up. And I just wanted to reach the most people. So by keeping that $2.99, a lot of people can get this book in their hands. It's only $9.99 if you want the print edition. And again, it's just a beautiful opportunity to get out there and to reach people.
Yeah. You know what? This is just one of the banes of my existence, George, is that I keep selecting the Amazon day when you're ordering. I always have these digital coupons that I can use. It's prompting me right now. I can get your book for like 49 cents or something like that.
It's for unlimited. Yeah, that's $12 a month. And I do it all the time. I do it for whatever I want to learn about real estate. And I've got a podcast myself. So all the time I'm learning about some different type of real estate or private equity. So yeah, Kindle Unlimited, great deal.
Yeah. So let's go into a couple of the chapters here. I'm interested in what you've named, even some of the chapters. One of them is how I built my runway to financial freedom. I would imagine that has something to do with getting yourself prepared and for that.
Like so many great things in life, much of it was accidental. My sister introduced me to entrepreneurship. It was in bioscience, and I went into data science. Then I had another great leap from academia to industry to actually running my own show. So we worked together to launch a construction company. And that was such a beautiful experience. I thought, well, now wait a second, I really need my own kit. So from getting into industry and getting a high paying job, I like to call myself a recovering PhD. So as a PhD, I never really thought about earning great money. It was all about just doing things that I loved. So then to get to the point of actually running my show and literally my own show at this point, because now I'm buying multifamily and these are my businesses, I was doing that for quite a while. And I always thought, wow, if I could just make it to, say, I think it was 2022 that I left, you just make it to 2024. It'd be perfect. Well, 2022 came along, interest rates went up, fintech completely upended, and I got dumped out a couple years earlier than I'd expected, laid off essentially. So, wow, that's why I say, build that runway before you need it, because there's nothing like getting to the end of the runway and realizing, oh my goodness, we don't have enough speed to take off. So you don't want to do that. Build it before you need it. And hopefully you get to the point where it's, 100% your choice and you've more than replaced your income. I just sort of took a leap of faith. I thought, well, I'm just about where I want to be, and I don't want to learn a new W-2 job. Sayonara.
Another one of your chapters says dream, believe, achieve. That sounds a very rich, think and grow rich type of thing. Can you talk a little bit about that?
Sure. Again, it's the idea that so many books talk about how to become wealthy and just do what I did. And I'm thinking, wait a second, you got to find your own dream and you got to really believe it, right? I got to wonder how many people read these financial books and they say like, oh yeah, but I can't do it. Oh, even my friends and acquaintances, they say things like, oh yeah, I wasn't born in a rich family and all that. And, do they realize though that my first apartment, we bought with $250,000 down, and there were three partners. So we had about $90,000 apiece, including the closing costs. Now, when you consider that, it's hard to buy a single family home for $90,000, and we got into 14 units and Orlando, this is where housing is decently expensive, that, you can do this. It has a lot more to do with who you are and what you know and what you're capable of doing than it does with having a lot of capital. So you really have to believe in that dream. And I guess I can't really do that for you if you're out there listening and wondering if it's possible. But again, realize, hey, look, if you're poor rich or if you already have a 6-figure plus job, it helps, but it isn't necessary.
I hate to take this to sales, but it kind of does relate in some ways, because I have found that when you actually believe in a product or believe in a service, the sales comes a lot easier.
Yeah.
So if you sell yourself on your vision and your dream, it will come easier.
If you don't mind, I have another anecdote. Some
Sure.
people talk about affirmations, and I kind of mock a little bit affirmations by saying, I'm beautiful and everyone loves me. Huh? Yeah. So,
SNL skit. Yeah.
so tell you the truth, I didn't even know where that comes from, but affirmations are all about, I'm already there. And maybe for some people that helps, but I feel like you don't believe it when you say that. Say that, I laugh. I wish everybody loves me. I wish I was better looking. But the reality is you've got to completely believe it. And I'll share an anecdote from Cody Sanchez's book, Wealth on Main Street. And she says, when she talks to poor CEOs, they'll say, what did you attribute your success to? Oh, I made all these great decisions. But when she talks to the great CEOs, they say, I just stuck with it. And it really is determination. Determination is what creates the success. But to go back to another classic book here, now don't let me get it wrong. I think it is Think and Grow Rich, that it really is 100% that you, oh God, no, how to win friends and influence people, build a hearty desire. A lot of people say that's garbage. Desire, desire is like this, but determination. But how do you build a determination? What I'm saying is everybody has a little piece of the puzzle. You need to truly believe it, but to truly believe it, you have to have real desire. If you're a corporate leader, you have to motivate the unmotivated. Desire is garbage. But when you are in the entrepreneurship space, you're dealing with a completely different population of people. These are people that are complete self-motivators. So I wouldn't soft pedal the desire. You've got to really love it and believe in it. And I think the two go together.
Let's jump to your podcast for a second. What's the name of it again?
Okay, so currently I'm calling it the founder where leaders are forged daily. Entrepreneurship is something I'm very passionate about, but I think I am going to rebrand it after my book because I'd love to tell your listeners this because they may have a podcast or maybe contemplating a podcast. I called it the founder, like founder with a Y. In other words, I misspelled it on purpose so that it would be unique, thinking that the search engine would lead me right to it. But when you type it in, it fixes the spelling for you. So I did myself a
Mm.
total disservice. And the second thing is by not having real estate or passive investing in the title, I think I really missed my audience. So going through a rebrand right now, but a totally beautiful experience. Now I look forward to the day I can say that I've interviewed 500 guests, but I am at well over, I think, 192 right now. So it's been an incredible learning experience and I appreciate the opportunity to call it out here.
Out of that 192 guests you've had, I'm sure there's been a couple that just like floored you, maybe even
Sure, sure.
surprised you.
I'll give
Did
you a
you call
couple.
those out? Like
Yeah, yeah, I'd love
what
to. Yeah, the ones that help me change the way I invest, like Grant Shipman. He talks about co-living. It's a beautiful space. It's a way of helping people. We got a housing crisis and you're making outsized returns while at the same time allowing somebody who may actually enjoy the camaraderie of living with someone else to you give them a better experience. They save money. They can put that money into who knows what, maybe going on extraordinary trips or hobbies, etc. And you really serve a need. And he calls it out in the title of his book that the quickest way to wealth is solving someone else's problem, essentially. So 100% I believe that. Now that's something that I would be considering investing in the future. Another one that helped me, I interviewed Michael Parks, and he talked about how it really makes a whole lot more sense to lend out of your self-directed IRA because you don't have to worry about your unrelated business income and the unrelated debt financed income. So the EDFI, et cetera. Why not just ditch all that and just lend out of that self-directed IRA? And then with your private money outside of those retirement accounts, that's where you go and invest in your syndications. So just a couple examples of people who have changed my approach. Some of the private lenders I've interviewed have helped me a lot to see there's another side to it. It's not just equity, but actually here's one more. He's from Chicago and he buys all of his investments 100% outright owned, never uses debt. The guy makes great money and he's never going to lose a dime. There's 100 ways to make money in the business. And like we mentioned earlier, you asked the question, do you think that certain people and their personalities work better with certain investments? Yeah, absolutely. Some people are not going to want to be in a real estate investment because of leverage. Well, here you go. You got options even in the syndication space where people are getting decent returns and they're doing it with zero leverage.
and he's probably in the best scenario out of everybody right now with the volatility there.
Yeah, absolutely. He sleeps well at night.
So before you started Roberts Capital Enterprises, you were partnering with other people in another venture. Like, what were some of the big lessons you learned there?
Well, I would say you learn lessons both positive and negative. Let me start with the positives. We all did background checks on each other, which is great. And I think that when you get on down the line, you think, hey, I know all these people. I know people's reputation in the industry, and maybe you stop doing that. So that's one of the things that I learned from my colleagues there. And that was huge. The other thing I learned was certainly the power of partnering. So I still partner with those guys. I have active deals and would certainly consider doing deals with those partners in the future. So, certainly a lot of positive ideas. But at the same time, one lender we spoke to one day, early days, said, you guys don't have a company, you have a mastermind. And like, wow, that landed like a ton of bricks. And I came to realize, maybe we were more of a mastermind. We were five guys looking for our first big deal. And we all found it and we moved forward. But I came to realize that until you've done a few deals with people, you don't really know where you fit in. Are you asset management? Are you investor relations, et cetera, et cetera? So, if you find yourself in the same situation where, the first group you're working with, you may find that over time that your role will change and you may end up in a sort of a different situation. So yeah, nothing against who I was working with. And again, still working together, learned a lot of beautiful lessons, But I guess I would say it's more like, we did our world tour and now we kind of having our solo careers.
You know, George, it's always such a joy to talk to you. Yeah, there's always such great insight. Before we switch into the rapid fire questions, is there a concept we should have tried to hit on here today?
Can I hit that after the rapid fire?
Yeah.
Okay.
Well, the first question is, what lie do real estate investors often tell themselves?
Well, you know what I said last time, just do a deal. So we're going to have to come up with something new. They tell themselves that their projections are real and they make far too many assumptions. You're saying you're going to raise rent in 5 different ways, including we're going to put up carports. Forget about it. The market isn't going to support it. So don't believe your own projections. Know that things will go wrong along the way. And if you don't build in a strong margin of safety, you're going to be sorry.
If you could go back in time and give your younger self a piece of advice, what would it be?
Yeah, if you work hard, you do the right things will be fine. We all stress way too much about what we're doing. Don't look at the scoreboard. Look at how you're training. If you're doing the right things, you're going to be a champion in your time.
Outside of your own book, do you have a book recommendation?
Oh, so many. Let's see, I'm reading The Lethem Theory for my wife. She loves that book. To me, it's kind of repackaged stoicism, but it's great. I think that stoicism needed to be repackaged because I think there are a lot of people that are just living in this emotional soup that is preventing them from doing and becoming what they could be. Favorite all-time book is How to Win Friends and Influence People. And my favorite business book probably always will be The 7 Habits of Highly Effective People.
What single strategy or tool have you implemented that has had the biggest time-saving impact to you or your business?
It's all about hiring and delegating and how you do that. And so over time, I just learned to delegate the right tasks, to trust, and to just make sure that I'm spending my time better and better. In the old days, I would have my assistant just work on the podcast and I was doing everything, including the bookkeeping. And I thought, wait a second, this is backwards. We can release a few less episodes. And now she's helping me with the bookkeeping. And now I just look at the profit and loss and the balance sheet and I can say, this makes sense. Send it to the accountant. So really just learning that you have to absolutely value your time and make sure that you are doing the highest value tasks. Everybody will tell you it's true. What's simple is not necessarily easy.
Well, let's go back to what you had asked before. Like, is there any kind of topic that we should have hit on here today?
Sure. How about fun? Make sure you're having fun because if you're not having fun, eventually it's going to become a grind. And for your relationships, I guarantee that that will come back and that'll pay humongous dividends in your business, both in terms of you having more energy and also having fewer monkey wrenches tossed in when those relationships or when your health is not up to par.
Yeah, I'm always fascinated with the concept that we get so focused on investing in the next property, investing in the next business. It doesn't even occur to ourselves to invest in ourselves.
Yeah. Would you make your business plan, raise the CapEx budget, and then not execute? That's what we do every day when we say, hey, I'll exercise tomorrow, or, I'll start that hobby tomorrow, or whatever it is that makes you happy and healthy. The best CapEx project is you.
Well, George, I really appreciate it. One more time, you can find him at robertscapitalenterprises.com. That's going to be a clickable link in the show notes, as well as links to his book, podcast, and a few other places.
It's been a pleasure, and I greatly appreciate the opportunity to come back.